it can be a great opportunity when that 9 period moving average break and it's been under it for a few days after the volatility starts to die down, but it's still high. That can be a great signal on the main markets just to know when a crash has finished as well.
The other thing that's interesting to look at is the historical market charts and how some of them are very, very similar to recent charts. If you look at the period leading up to 1929 or leading up to 2008, it's amazing how these chart patterns repeat again and again. And
welcome back to Acequisition. If any of our channel's 5 key verticals, stocks and shares, including commodities, acquisitions, including you yourself potentially taking part in hostile takeovers of public companies with us, profit maximization, asset protection, and tax minimization, sounds like everything you'd ever need in your finance journey, please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room, linked in the description, so you can get in these plays and opportunities when we do. In regards to October, how people could even play the VIX during this time?
Well, I think the key thing to remember in October is what's known as the scariest month of for the market, because there have been so many historic market crashes. So these big crashes that you see where there's a huge drawdown in one day. So the earliest one was back in 1907, where there was a 50% decline in the market back in 1907, more than 100 years ago. And then, of course, everybody knows about the crash of 1929, which led to the Great Depression. Again, that happened it started on October 24th in 1929, and over the space of a few days, there was I think about a 25% crash in the market. And of course, the way markets go is it bounced again, and that's the biggest losses, where people came back in thinking the crash was over, and then people lost money into the 1930, 1931, and so on. So that's probably the most famous one. But of course, you've also got October 19th, 1987, where there was a 22% decline, I believe, in 1987, and that was in one day. So I think that's possibly the biggest one-day decline, which would be the equivalent to the Dow falling almost 10,000 points today. So
yeah,
that was huge.
Yeah, people, you go on Wikipedia, always the recent crashes are the ones, biggest point drops, but actually it's much more important to look at the percent. And
yeah, it's very dramatic at the time, but again, it bounced back, and when you look at that on a chart now, it's hardly a blip on the chart. You barely notice the 1987 crash, but it was a major panic at the time, and it led to various issues, but the markets bounced back, and it was, with hindsight, it was the start of a major bull market. So it didn't it didn't cause anything major. Then, of course, you got 1997, when there was an Asian crisis, and people were worried about that. There was a 7% decline in one day there, and the biggest ones in recent times was in 2008. Everybody remembers the 2008 financial crisis, and there was an 18% decline in one week at the beginning of October 2008. So that was the most recent one. So there's been nothing major since then, but again, share prices, asset prices are historically high. They've been pumped up since 2008. There's been low interest rates. There's been quantitative easing. There's been the money printing during the pandemic, and all that has led to inflated asset prices. And will it continue? Will they keep churning out money? There are indications now that they're going to. Recently, the Chinese announced a major initiative to put more money into the markets. They actually said they were going to buy stocks, and I think they put something like $140 billion into buying stocks. In the China market and the Hong Kong market recently has increased dramatically. I noticed this morning there was an article in the Guardian where the chairman of the Bank of England has said that they're going to decrease interest rates again, which no doubt is going to lead to more money printing from them. The Fed decreased rates, and they're now talking about decreasing them another 0.5 percentage point before the end of the year. So this cycle of money printing is going to continue, which tends to inflate asset prices. But at some point, the bubble will burst. There's no question about that. None of us know when it's going to burst, but could it be this month? Maybe. Who knows? So what we want to look at is how do we play that?
The strategy, yes. And I think that leads very nicely onto, why would you not want to, they call it risk offing. Why would you not want to risk off in September and October, see how it plays out? And yes, bull markets then start, big bull markets then often start quite shortly afterwards, but you're looking at December, January, that sort of time. And and how to play it in terms of strategy. Let's talk a little bit about the VIX. It had obviously a huge spike in the beginning of August. It was almost like a flash burst, almost a bit too quick to play. But we've come back down. We're now at the 200 period moving average on a daily time frame. It's bounced off that 2-3 times now, and we're curling back up. So I think what you're saying spot on. How would you go around playing that? Are you already long on the VIX?
I think the VIX, or the volatility index, and you can trade futures or options on that, and it's there to let portfolio managers hedge their portfolios against volatility. So it's not necessarily something that is dependent on market direction, but generally when the market has big declines, the VIX will increase. So you want to be, if you're expecting a decline in the market, you want to be long the VIX. If you expect the market to settle down again after these big periods of volatility, and if you see the VIX going up at levels over 50 or 60, well, it's probably a good time to short the VIX, because generally these days of volatility are fairly short term. So right, I think the VIX has increased in the last couple of weeks from around 15 up to it's close to 20 now. I think I'm right in saying.
Yeah, you tweeted it. You tweeted about it at 15, bang on that moving average, and then it's up to 19. But that's still, it's not over yet, I think. And yeah, and then also looking on the short side on the way down, playing both sides. Something I look at in terms of you're saying over 60. I think that's a very good point. If it's not a flash burst as we saw in the beginning of August, which is a bit of an anomaly, typically our moving average I use is the 9 period moving average, and what that does is it effectively can often show the move of the VIX quite nicely, and then once that breaks and it's been under it for a few days, I'll sort of show some screenshots. Often that is when you know how to short, and then you can place your stop above that recent high, rather than having to just go at round numbers or whatever it might be. And also on top of that, the connection between the VIX and the Dow, as you know, but obviously I'm mainly talking to viewers here, it can be a great opportunity when that 9 period moving average breaks, and after the volatility starts to die down but it's still high, that can be a great signal on the main markets just to know when a crash has finished as well. So that's really fascinating information, and something that I saw in recent years, and I'm definitely going to be more prepared when this next one comes around, which I think is sooner rather than later.
It's very useful, and anyone who's trading the main markets, anyone who's got a portfolio, or anyone who's trading futures should definitely be looking at the VIX as part of their toolkit for predicting where the market's going to go. You don't necessarily want to trade the VIX. I think it's an interesting tool to trade, and it's definitely great for hedging market risk. But even if you don't want to trade it, it's definitely something you should be looking at when you're playing the markets, particularly in the futures markets or options markets where you're using a lot of leverage. It's definitely something you want to be looking at. Any serious hedge fund or portfolio manager has the VIX on the screen all day. There's no doubt about it.
Exactly, yeah. Especially when you can see the bursts are quite sudden and quick, and can highlight things before they actually happen.
You'll often see the VIX moving before the market moves.
Yeah. I mean, even just highlighting that now, I guess it's been 3, 4, 5 days of rising, and the main markets haven't really fallen that much yet. That's
there's so many conflicting signals at the moment, because you've got all these signs of liquidity, which the market loves, because if the central banks are going to start printing more money, it generally goes into the stock market first. That's what's happened in the past, and no doubt that will continue to happen. The Chinese did it last week. The money went into the markets went crazy, and the same happens when the Fed does it, or any other central bank with the power to create vast quantities of money.
Yeah.
Well, it's going to be an interesting month, and the presidential election coming up on November the 5th, Guy Fawkes Day, which is quite an interesting date to have a presidential election. So there may be some market volatility leading into that.
Yeah, and they might use that
would
as a
be,
headline, and that could cause more fear, because they might talk about Guy Fawkes and explosions and stuff, and it could send more fear through the markets.
Yeah, yes. Well, it's not something that's celebrated in the US, as far as I know. It's a very British thing, even English thing. Guy Fawkes Day. It always reminds me of one of my favorite movies, V for Vendetta. Do you know? Have you seen V for Vendetta?
I can't remember. I've definitely heard of it, but
Oh,
I'm not sure I have.
it's a great film. Anyone who hasn't seen it should definitely watch V for Vendetta. It shows what happens when the state is completely out of control, and
Okay,
how
yeah,
the people
definitely
end up
watch that.
rising up on the 5th of November and marching on Parliament to overthrow the government. So, and
There you go.
anyone who's even slightly libertarian minded should definitely watch V for Vendetta.
Yeah, so that'll probably be the title of newspapers in the US if we have a crash, and then if it's in the UK, it might be Guy Fawkes and that. So we'll see what happens. But
Yes, interesting time. So hopefully this month just goes calmly and smoothly, but the markets are at historically high levels.
yeah,
So anything can happen.
exactly. And whilst people will criticize and say there's no chance of a crash, why would you not want to be just risk off for a month or so, not in the market? So and things do work very cyclically as well, and very fascinating to look at history, and that's a key part of anyone's due diligence, for sure.
The other thing that's interesting to look at is the historical market charts, and how some of them are very, very similar to recent charts. If you look at the period leading up to 1929 or leading up to 2008, it's amazing how these chart patterns repeat again and again, and to compare them to the markets today can be an interesting exercise. It may tell you nothing, because they may keep going crazy and going up, but
Yeah, definitely, yeah.
they may be a facsimile for what's happening now.
Yeah, totally agree.
As for me, I like the stock.
Order filled.